Hello, my name's Derek Kelly. I'm the CEO of Hilltop Finance. I'm here today to provide you with a market update. The update is going to be in three parts. The first part is we're going to look at performance over the last 6 months. Then we'll look at our approach to investing in this current market. And then I'll do my best to predict what I think is going to happen over the next 6 months of the year. So to begin with, what's happened over the last 6 months? Well, it's probably been the worst opening to the US stock market since 1970. In that period, inflation was a big impact on the market, and that's what we see today. Inflation is currently running at 10.1% in the UK, which is having a massive effect. In the US in 1970, the market started by being down in the first 6 months by 21%. In the second half of the year, that increased to an actual gain of 26%. So overall, for the year, although it was a torrid time, profits were actually made. So what's causing the drag on the market? Well, consumer confidence and investor confidence remains really low in the UK. As I've said, inflation is running now at 10.1%, the highest it's been for 40 years. And unfortunately, the war in Ukraine continues to rage on. China could be entering into new lockdown restrictions, which will have an impact on supply chains. People getting problems getting hold of goods and components. So what we're finding is it's a really torrid time at the moment. We're hugely frustrated by the markets, but there's very little we can do given the global impact of these events. So what's our approach to investing in this market? Well, it's pretty straightforward really. We continue to invest in high quality businesses which are global. These businesses are being invested in for the long term. So not 2 months, 3 months, 6 months, but we're investing for 3, 5, 10 years. So we're looking for strong businesses with strong management teams and good cash flows so they can weather any potential storms and have pricing power so they can increase prices even in times of recession. Although these businesses have been underperforming in the first 6 months of the year, because of the strong cash flows and the sustainability of these businesses, we do see them picking up in the second half of the year. But rest assured, we're investing your money wisely and for the long term. Interest rates, inflation, all the bad news out there is going to have an impact over the coming months. But we will weather these storms, and in the long term, you will get the gains we're all expecting. The quality of these businesses will outstrip all these small events. The businesses which we invest in, as I've talked about, are high quality. The people like Apple, Microsoft, Tesla. These businesses are strong, well-known businesses which are going to continue to grow. So what's likely to happen over the next 6 months? Well, in July, we've already seen an increase in the markets. So things are starting to get better. The markets tend to price in any bad news about 10 or 11 months ahead. So a lot of that bad news has already been put in place. Share values have devalued because of that bad news. So we're starting to see that kind of reverse. So I do expect for the second half of the year for things to get better. There will be bumps along the way. There's news still to come. Who is going to be the next UK Prime Minister? The answer to that will have an impact on the markets. So we will see some volatility continue over the next 6 months, but I do expect that we'll end the year in a much better place than we started it. I hope that provides you with some information about what's happening in the markets. If you need any more help or assistance, please do not hesitate to contact us and we can have a personal conversation about your portfolio. You can either call us and speak to a financial advisor or email us and we'll get back with an appointment.